Oh, it's 100%. I mean, the big drop on Monday that we saw in both gold and silver, that was done with paper. I think the number that I heard was 1.2 billion ounces of silver traded on Monday. The world only produces 850 million ounces collectively in a full year. That's global annual production. Well, that's the silver over gold. That's easy because silver is such a small market compared to gold. I mean, the same dollar has at least 10 times more power in the silver market than the gold market because gold is so much bigger. Um, as far as a failure to deliver goes, we're already seeing here in November, uh, the amount standing for delivery has already increased from first notice day. In past years, if you go back 3, 4, 5 years and earlier, the first notice day would have X amount of contracts, and by the time delivery was made, there might only be 10 or 20% of those contracts still standing that didn't walk away and take a fiat settlement. Over the last couple years, maybe a little more than 2 years now, what's happened is you have X amount of contracts standing for delivery, and by the time the delivery cycle is done and deliveries are being made, that number might be 1.5x or 2x. And it's already looking like November, which is traditionally an absolute non-delivery month. We may have 20, 30, 40 million ounces of silver standing for delivery. And then, of course, you've got December, which is a big delivery month. And then again, I believe February. So they're running a gauntlet right now trying to source metal to deliver to the contracts that are standing for delivery. Oh, it's 100%. I mean, the big drop on Monday that we saw in both gold and silver, that was done with paper. I think the number that I heard was 1.2 billion ounces of silver traded on Monday. The world only produces 850 million ounces collectively in a full year. That's global annual production. So you had almost 1.5 times the amount of silver that's produced in a year traded in one day. Uh, I mean, I don't have, I can't show you proof that no gold or silver, physical gold or silver were sold, but I can tell you from the standpoint of the mentality of the buyers, buyers have had a hard time picking up big pieces. When I say big pieces, 25, 50, 100 million plus. They've had a hard time procuring gold and silver in those numbers. Any buyer, any physical buyer that got nervous, they would have sold. They would have hedged with paper, is what they would have done. You didn't On Monday. You did not see, in my opinion, you did not see any real physical gold or silver hitting the market. What you had was it was a paper slaughter, and that's you can go back to Robert Rubin's strong dollar policy in 1996, and that's been the case on COMEX and LBMA ever since, is that every time we see a waterfall on a gold or silver chart, it was caused and done by paper sales, not physical sales. When one bursts, they're all going to burst pretty quickly. But, I'm on the record saying that I think the derivatives complex is going to be taken down by silver. I think silver goes and gold will go immediately, and that's going to put a very bleak picture on the other contracts that COMEX has, whether it be oil or pork bellies or interest rates or whatever. The value of a contract that cannot perform is zero, and if you've zeroed out, uh, and I'm using silver because that is the market that I believe is going to detonate the entire system. No, central banks have their purchases have been continually expanding. They've gotten bigger and bigger and bigger. They know, I mean, Lucian, if you and I understand this, and a lot of people understand that the dollar's a problem, you better believe that central banks all over the world know that the dollar is a problem, and they better hedge that position or put something in there or on their balance sheet that's going to expand when the dollar collapses. They're going to have to. they understand that gold is the answer to a collapsing dollar. So that's why these central banks are unloading gold. And I believe, the official statistics show that yes, they're buying hand over fist. But I think there's a lot of unofficial buying by central banks that's not being reported. Well, I've said this for 10 or 15 years, that when all was the end game would be inflation and deflation at the same time. Inflation of the things you need to live and survive on, and deflation of the assets you already own. And I mean, you can see the beginnings of that. Uh, just look at the commercial real estate. That's collapsed 50% or more. And here we are looking at credit. Look at the auto loans. I mean, auto loans are cratering. Look at home loans. Home loans, uh, late payers. I mean, those are expanding. All the classic signs of a credit problem, they're right in front of your face. Um, and a credit problem means forced liquidations. In other words, it means owners of assets are being forced to liquidate them. That causes a deflating price, while at the same time your eggs, your gasoline, etc., are going up they cost more. So it's taking more dollars to sustain your lifestyle or living. Well, the way to do that is simple. If you have stocks that are core positions that you never intend to sell, then tell your broker that you want to get a certificate. And the best way to do that, the cheapest way to do that, is to tell your broker to send the shares electronically to the transfer agent. It's called DRS, direct registered the securities. Once the transfer agent holds the shares, then you tell your transfer agent, I want my certificates, and they'll send you the certificate directly. That's like having a car title or a deed to a home. It's proof positive that you own those shares, because with the Great Taking, and the Great Taking is no joke, all of those laws are on the books. The ink is dry. They've been doing this since 2014, getting ready basically to bail in the public. When you deposit money at a bank, you're no longer considered a depositor. You're a lender. When you deposit shares at a broker, those are no longer your shares legally. They're the broker's shares legally for your benefit. So if your bank or your broker goes under, they're going to take your assets to try to fix their problem. So that's
That's a
getting
good
out of the
point.
system. If you have bank balances, or when people ask me how much gold or how much silver should I own, my simple answer for the last probably 4 or 5 years now is you put into gold or you put into silver whatever amount you don't want to lose, because gold and silver cannot bankrupt in a world that is going to be uh, everything is going to bankrupt. The whole debt facade is going to come down. Yes, it will be much bigger, and I would just say that if you're involved in a tokenized gold uh, deal, you have to have trust. You have to trust that that gold actually does exist and it actually is in the vault. Having gold in your hand or silver in your hand, you know you have it. Having gold in a private non-bank vault, as long as you've bought it from one company, moved it to the private non-bank vault, then you've got two separate entities. You don't really ever want to buy from a dealer that stores the gold themselves, because who's there to watch them? There's no way to know whether the gold actually got there. But if you've got two separate entities, or in a retirement account you get three separate entities, then you've got each one watching the other to make sure that they're honest. So my comment on that basically is, with tokenized gold, there's still trust involved. There has to be trust
Yeah.
involved, otherwise you won't. Yeah, that's basically a confiscation question, and I think it's more likely that they will raise and make special taxes on gold and silver. But then again, that's not going to affect barter, or you pay for a car with an ounce of gold or whatever. Um, I think that taxation is much more likely than confiscation. Well, I mean, obviously there's hotspots all over the world. Uh, I think the next big one is going to be Venezuela. I mean, we're amassing troops and ships off their coast, and just this morning, Putin announced that he's going to be sending hypersonic missiles to be based in Venezuela. Well, first off, we don't have anything that can catch a hypersonic missile. I think we've had 2 or 3 successful tests, but we don't have any actual missiles, working missiles yet. So uh, the bottom line is, if you can't catch it, you can't kill it. So if you got a missile inbound that you can't catch, it's going to land and it's going to strike, either at the target that they've programmed or miss, but it's still going to strike. The problem with the problem with having hypersonic missiles pointed at the U.S. is we can't defend it, and I think that's probably going to be the big news next year. Worse than that, I think it's worse than a Cuban Missile Crisis because you had statesmen running the world back then. Uh, you had serious people running the world. The world is so fragmented today. Uh, and I mean, if you look at what just look at the things that come out of Trump's mouth. I mean, I think he's done some good things. I think he's done some really bad things. Uh, but he needs to keep his mouth shut when it comes to things like this. You know, foreign, trying to bully other leaders verbally. I don't see the benefit in that, and I don't think that that's a serious way to uh, to handle foreign affairs. I mean, just think about some of the
Yeah.
things that have been said. 6 months ago they were talking about turning Gaza into a waterfront resort. I mean, that's not even serious. I mean, maybe they are serious about it, but that's not serious policy.